A lot of people get lathered up over Jackson Hole. I've been there many, many times. It's truly an academic conference. There's boring papers that Michael McKee reads cover to cover. I'll take one or two of the papers typically and read them cover to cover. But too often they really work at the Kansas City Fed to make it a constructive snooze fest. James Bianco knows this, Bianco Research, and he joins us now for really my first conversation on what the central bank will do. What does Chairman Powell, Jim Bianco, not want to do in Wyoming?
He doesn't want to cause waves. He doesn't want to cause problems similar to what he did in December of 2018 when he talked about the taper was on automatic pilot and it was going to be like watching paint dry, and it greatly upset the market, leading to the Powell pivot 2 weeks later. What he wants to do is lay out a plan to begin a taper sometime next year. And he's going to put a lot of caveats in it. And those caveats are going to be provided that the economic growth continues and provided that there is no surprises to the economy. And that's going to be a shout out to if Delta continues to rise and restrictions, I don't want to say lockdowns, but restrictions on the economy continue, that could derail the plan for tapering.
Jim, a lot of people are looking for taper talk. However, we've already gotten some sense that one of the main topics will be income inequality actually contributing to low rates going forward and what Fed policy can do about that. As a market watcher, how much are you looking at that as possibly giving more of a sense of what's to come than people are perhaps expecting?
Well, income inequality is a big problem, and the Federal Reserve's big picture policy can contribute to that. But the immediate policy, when I mean immediate here, year to year, it's very hard to say that they're going to adjust policy either way, because if they were going to talk about income inequality, I really think that what they should be doing is raising rates. Or they should be tapering faster, because I think it's this low rate creating this speculative atmosphere in financial markets that is contributing to income inequality. So yeah, I think they're going to talk about it. I hope they acknowledge their role in it, although sometimes I have my doubts. And I'll see what they want to do, but more likely it's going to be on the regulatory side, if anything.
Jim, you're not alone in saying this. A lot of people saying that Fed policy has actually contributed to widening income inequality, and it goes to a broader point. Have we reached the threshold at which Fed policy is viewed as perhaps harming more than helping on the margins, not only with respect to inflating asset prices, but also at a time when consumer prices are increasing at a faster pace than many people had expected?
Yeah, if you look at financial markets, let's take the stock market. The dirty little secret is it's not cheap. You know, there are booming earnings, but you're paying big for those earnings. The valuations in the market are near the 2000 peak valuations, but the justification is twofold. One, earnings are very strong, and two, Jay Powell's got your back. And if that creates an environment where there is a change in policy, like inflation is perceived to be persistent instead of transitory, that could lead to a sharp pullback in markets. So they're setting up markets that they need to continue to get constant good news to go up. Now, they have for nearly a year now, they've been getting constant good news to go up. But if that day ever comes that it doesn't, they could be setting it up for a bigger fall than you would otherwise see.
Jim, can you help us understand why yields are where they are? Even Fed Chair Jay Powell has said he doesn't quite understand why they are as low as they are. You say perhaps it makes sense if you take a look at growth outlook, not necessarily inflation. Can you elaborate?
Yeah, I think if you look at, I've been looking at the reopening stocks, an index of them, and they have been dramatically underperforming the market since the March peak, which also happens to be when the 10-year yield peaked. And if you overlay a chart of reopening stocks relative performance to the 10-year yield, it's the same thing. What that suggests is that the market is more focused on growth, as it fears that growth is going to slow. And we're not talking recession here. We're talking about from a very high level, 6% or so GDP estimates, down to something a little bit less than that. As growth slows, so do interest rates. As growth picks up, so would interest rates. And the biggest driver, I think, of growth slowing is the fear of restrictions from the Delta variant, as we see more and more. I'm in Chicago, and just yesterday they announced that starting Friday, everybody has to wear a mask indoors. More stuff like that will be coming and coming and coming, and that's the fear.
Jim, at Jackson Hole, there'll be a lot of academic papers, and I'm going to pick on the vice chairman of the Fed, Richard Clarida, with his wonderful DSGE that he did with Gertler years ago, I believe 1994. Does any of the theory that we have now apply to the actual debates of Jackson Hole? Does dynamic stochastic general equilibrium theory actually matter in the milieu we're in?
You know, the best Federal Reserve officials to listen to are the ones that recently leave. Dan Tarullo was at the Fed during the financial crisis, left in 2017, and gave a speech at Brookings where he said the Fed has no working theory on inflation. That if you test any theory you want, rational expectations, anchoring, monetary velocity of money, it just doesn't pan out in the statistics that it is a good explanation of what causes inflation. We are all kind of in the dark, and I think Rich Clarida is also in the dark. He's been a big advocate of inflation being well anchored. There's arguments to be made that it's becoming unanchored because you've seen the big rise in the inflation expectations, especially like the University of Michigan survey. And it's going to be very difficult for the Fed because they want to project certainty, or they want to project calm, that we've got this figured out, where inflation is going to go. It's going to be transitory. But the fact of the matter is they don't know, we don't know. Inflation is a very difficult thing to get your head around, and it's a very difficult thing to understand. So it's a big guess, and we'll have to see. And some of those papers, I think, should address that next week.
Jim, that's such a great line. We've got to leave it there. Jim Bianco there of Bianco Research, the president, because when you leave, Lisa, you get to say what you really think.
Yeah, you could actually